Hey everyone, welcome back to Corporate Decoder, the place where we decipher the often complex world of business and finance. And let me tell you, our topic today involves a bit of a strategic reshuffle, a merger, and a whole lot of preferred stock. Buckle up because this one's a ride. So we're diving into a filing from BT Brands Inc., a company that's making a significant move by merging with Aero Velocity Inc. This isn't just a simple buy or sell, it's a complex transaction involving different classes of stock and a plan that could reshape the company's future. The main event here happened on September 2, 2025, when BT Brands entered into a merger agreement with Aero Mergisub Inc. and Aero Velocity Inc., essentially BT Brands, through its subsidiary plans to merge with Aero Velocity, making Aero Velocity a wholly owned subsidiary of BT Brands. Now, why is this happening? Well, Aero Velocity uses drone technology for advanced aerial mapping and data collection. They offer drone services to various sectors, including government and corporate clients. Think precision agriculture, environmental monitoring, and even emergency response. They're also looking into drone manufacturing, so BT Brands is essentially acquiring a company with a strong presence in a growing tech sector. Let's talk about the deal itself, what BT Brands is giving up, and what it's getting in return. For Aero Velocity shareholders, they'll receive a combination of BT Brand Series A1 convertible preferred stock and Series A2 convertible preferred stock. This is the merger consideration, and there's more. The existing shareholders of Aero Velocity are also planning to invest between $3 million and $5 million into BT Brands through a Series B convertible preferred stock offering. This is called a concurrent financing. This means existing investors are putting more cash into the combined company. Now, here's where it gets interesting after the merger and this financing. A big chunk of BT Brands will be owned by the former Aero Velocity shareholders, around 89% to be exact. The original BT Brand shareholders and option holders will hold about 11%. This is a massive shift in ownership and control. BT Brands currently has its common stock trading under the ticker BTBD on the Nasdaq Capital Market, and it seems they're quite focused on maintaining that listing as a condition for the merger to go through. But wait, there's another layer to this plan. Before the Aero Velocity deal closes, BT Brands plans a restructuring. They're going to create a new subsidiary called BT Group to hold all of its existing assets and liabilities. Then they plan to distribute the shares of this BT Group to their existing shareholders. This is often called a spin-off. It's like BT Brands is splitting itself into two companies, the drone business acquiring Aero Velocity and the original BT Brands business, which sounds like it might be restaurant related, given the mention of parent restaurant business. This spin-off adds complexity, but could also allow each business to focus on its own growth trajectory. Let's break down these preferred stocks a bit. The Series A1 and A2 preferred stock to be issued to Aero Velocity shareholders will have a stated value of $1,000 each. They'll be convertible into BT Brands common stock at a price of about $1.83 per share. Here's a crucial detail. The holders of the Series A1 preferred stock are expected to hold a majority of the voting power in the combined company. This means that even though they might not own the majority of the shares, the Series A1 holders could control the company's future decisions thanks to their high voting rights. The Series B preferred stock, which is part of the concurrent financing, also has a $100,000 stated value and is convertible at that same $1.83 price. However, it has a special feature called a reset date. If the stock price falls below the conversion price by this reset date, the conversion price can be lowered. This is designed to protect the investors in the concurrent financing if the stock underperforms. The BT Brands board of directors has unanimously approved this merger. They believe it's fair and in the best interests of the company and its shareholders. They're recommending that BT Brands shareholders vote in favor of it. Like any major deal, there are a bunch of promises and agreements between the companies. For instance, both sides have to run their businesses as usual until the merger is finalized, and they can't do certain things without the other's permission. BT Brands also promises to get directors and officers insurance and to set up a new equity incentive plan. This plan will reserve shares for employees, likely to incentivize them to keep the company running smoothly. After the merger, here's a significant change effective as of the merger's completion. BT Brand's current officers and directors will step down. This is common in mergers. The deal dictates that 5 new directors chosen by Aero Velocity will become the president and CEO of the combined company. This effectively means Aero Velocity is taking control of the management and direction of BT Brands. To get this merger approved, BT Brands has to file a registration statement with the Securities and Exchange Commission, the SEC. This document includes a prospectus and a proxy statement, basically a detailed explanation of the deal and why shareholders should vote for it. They'll then hold a special meeting for shareholders to vote on approving the merger and electing the new board members. Of course, this merger isn't a done deal yet. There are several conditions that must be met first. BT Brands shareholders need to approve it, and the company shareholders need to approve their part too. The registration statement must become effective with the SEC, and they need any necessary government approvals, which could include antitrust reviews. The deal also can't be blocked by any government orders. If the deal isn't closed by February 28, 2026, either company can walk away unless the delay is their fault. They can also terminate if a government agency permanently blocks the merger, if BT Brands shareholders don't approve it, or if Aero Velocity shareholders don't approve their end. It can also be terminated. There's a breakup fee involved if either party decides to terminate the agreement to take a better offer, a superior proposal. They'll have to pay the other side $3.5 million. This penalty discourages either company from backing out easily unless a significantly better deal comes along. During this process, both companies have agreed not to entertain or even discuss any other merger or acquisition proposals. This exclusivity clause ensures they're focused on this one deal unless something truly exceptional arises. For BT Brands, if a much better offer comes along and their board decides it's a superior proposal, they can switch to that deal, but they still have to pay Aero Velocity that $3.5 million termination fee. And for tax purposes, the companies intend for this merger to be treated as a reorganization under the US tax code. This means they want it structured in a way that hopefully allows for tax deferral for the shareholders involved. To help ensure the deal gets approved, Gary Coppold, a director and officer of BT Brands, has signed a support agreement. He's agreed to vote all his shares in favor of the merger. This is pretty standard and shows internal support. It's important to remember that all the details in these agreements are based on what the companies negotiated and agreed to at a specific time. They might not always be perfect representations of facts, and the materiality of certain points is subject to their agreement, not necessarily what investors consider material. This is just a summary, and the actual merger agreement filed as an exhibit has all the fine print. BT Brands is committed to keeping shareholders informed. They will be providing a prospectus and proxy statement with all the details for the shareholder meeting. Anyone interested can find these documents on the SEC's website once they're available. The filing also mentions that the directors and officers of both BT Brands and Aero Velocity might be considered participants in the solicitation of proxies. This means they could be involved in encouraging shareholders to vote in favor of the merger. Their interest in the deal will be disclosed in the proxy statement. This document itself is not an offer to sell or buy any stock. It's purely informational and doesn't constitute a solicitation for votes or investment decisions. And a crucial point, the merger is not guaranteed. It's subject to all those closing conditions we discussed. If they aren't met or waived, the merger might not happen, or it could be delayed. This could have a big impact on BT Brands and Aero Velocity's financial situation. The filing also includes a lot of forward-looking statements. These are basically predictions about the future based on current expectations, like when the deal might close or what the future opportunities might be. However, these statements involve risks and uncertainties, so things could turn out differently than expected. Keep in mind factors like unexpected difficulties, investor approvals, or even management distractions could affect the outcome. The company has also attached a press release announcing the merger and an investor deck for Aero Velocity Inc. This gives us a bit more insight into how they're presenting this deal to the public and potential investors. And finally, we have the official exhibits that flesh out the deal, like the merger agreement itself, the voting and support agreement, and the press release. Notably, certain schedules have been omitted, but the company agrees to provide them to the SEC if asked. And that wraps up the main details of this filing, signed off by Gary Coppold, the CEO of BT Brands. This is a big moment for the company, clearly signaling a major strategic shift towards the drone technology sector. Looking at BT Brands' situation, the move to acquire Aero Velocity is a bold step into a high-growth technology area. The fact that Aero Velocity's shareholders are taking such a large ownership stake and that Aero Velocity's leadership will be guiding the combined entity strongly suggests a significant pivot for BT Brands away from its legacy business, which seems to be restaurants, into a tech-focused drone operation company. The dual-track approach of merging with Aero Velocity, while simultaneously spinning off its existing restaurant business, indicates a strategy to unlock value by allowing each segment to operate independently and potentially attract different types of investors. However, this also introduces execution risk. Spinning off a business and executing a merger at the same time is complex. The preferred stock structure, with its varying voting rights, is particularly noteworthy. The Series A1 holders gaining majority voting control is a significant concentration of power that could outweigh their economic stake. A key risk is the successful integration of Aero Velocity and the retention of its key talent and customer relationships. The operational shift from a potentially traditional business to a technology-driven one requires careful management. The dependency on shareholder approval and the various closing conditions means the deal is not set in stone. The termination date set for February 2026, with potential extensions, shows a timeframe but also acknowledgements of potential delays. Overall, BT Brands is taking a big gamble on the drone market. If Aero Velocity delivers on its potential, this could be transformative. For BT Brands, however, the increased debt from ongoing operations and the complexity of the spin-off and merger at the same time presents substantial challenges. Investors should watch closely how BT Brands manages this transition and whether the promised growth in the drone sector materializes. Alright, that's our deep dive into BT Brands' latest filing. What do you think about this merger and the strategic shift? Is it a smart move or a risky bet? Let me know your thoughts in the comments below. If you found this breakdown valuable, give this video a thumbs up and make sure you're subscribed for more content like this. And don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching. See you next time.